All right, it's about 8:30 on January 20th. Interesting day in the markets today. Dow was down, almost 500 points at one point, rebounded maybe half of that back by the end of the day. I thought there were a couple interesting things that went on today, and this is sort of to continue to make the argument that I think a rebound is due. So I'm basically talking my book, which I like to do just like anybody else. But let's look at what I think were the positives here. First of all, one of the main things I like to do with the stock market, there's four of the main indexes: the Dow, S&P, Nasdaq, and Russell. I like to kind of rank them in order of volatility or beta. And obviously it goes the Dow's the lowest, and the S&P, then the Nasdaq, then the Russell. The higher volatility or the higher beta indices should lead the market whichever way it's going. So obviously in a down market, Russell should be the weakest, and the Nasdaq, then the S&P, then the Dow, and vice versa. Today we didn't have that. The first day that happened was Friday on the rebound. The Russell led the rebound up, which was the first time we've seen that in a very long time. Didn't help because clearly the stock market's gone down since then. But today, when the Dow started really tanking at midday, the Russell was holding. And it was like way outperforming the Dow at one point. And by the end of the day, when everything rebounded, sure enough, the Russell, ended up flat today. Here's the Russell chart. I don't know if you can see it, but the Russell ended up flat today. The Nasdaq, well, the Russell ended up a little bit. Nasdaq ended up flat. S&P was down some. Dow was down the most. Shouldn't be that way. It should be the opposite. So that's sort of a little tell sometimes that I see that the markets give. The second point is the assets that I talked about on Friday when I said, I think that there could be an asset rebound here. And the basic premise is that there are some assets that the markets are way too short here. Stocks are not one of them. But I talked about industrial metals. Well, first I talked about yen first, but the market's way too long. If you look at the yen, as stocks are making new lows, look, the yen was going up and stocks were coming down hard. As the stocks are making new lows, the yen held. This is what I consider the top yen day right here, this reversal day. The yen held. Tried to get through it, but it didn't. And that's because the yen's the most crowded thing out there, so it's going to start underperforming. And that started. Same thing with palladium, which is the most crowded industrial metal out there. And the industrial metals are sort of the most crowded group out there. Look, as the stocks were coming down this last few days, palladium wasn't going down at all. It was holding, right? And the Aussie dollar too, which I talked about, the currency, which obviously correlates with metals probably anyway, held, right? These days, it doesn't look like much here, but stocks were going down here, and this all of a sudden, randomly, started holding. So what's happening is the most crowded things are starting to underperform. Or in the Aussies' case, it's the most crowded thing short, starting to outperform, and same thing with palladium. But that's also an important thing. So you put those two things together, and I'm still going to talk in my book and think that there is some sort of asset bounce coming here. And again, Aussie goes up, industrial metals go up, yen goes down. Arguably, the correlations can kick in. You can get stocks to go up. Stocks are not my favorite one, but for stocks, people who are limited to trading stocks, that's sort of the logic here. The other important thing that I think happened today was, people talk about, what we need stocks to rebound is we need oil to go up and we need China to stabilize. That may be the case, but the way it starts, in my view, is what we need is stocks to perform well when oil does crap and China does crap, right? And certainly last night, China maybe didn't do a lot. It was down a little bit. But the whole China thing has become, well, did the government intervene or not? So, But Hong Kong, it was down 700 some points last night, and the Hong Kong dollar peg is in trouble. And so the China thing was bad coming into the market today. The oil thing was horrible. Oil was down like 5-6% at one point today. And did oil rebound some? Yes, but only after stocks. Stocks really only started coming back after oil closed, right? It wasn't because oil came back. Oil closed pretty weak, and stocks came back anyway. So if you can get the stocks to do well with China doing crap and oil doing crap, that also is a sign that the tape is a little bit better. Again, am I talking in my book? Maybe. But this is the evidence that I'm seeing right now for an asset rebound. And on top of all of it, just like everybody else, I'm a moron. So am I playing for a bounce here? Do I think a bounce can? Yeah, but everybody's playing for a bounce here. I don't know if they're playing for it, but they're praying for it. And again, I don't think any bounce is going to last. Could last a month, could last 6 weeks, as much as kind of thing. I don't think the stocks have put in their lows, although I think that today's low is going to hold for quite a while. because of these other things. But on top of it, stay long fixed, stay long the short end. I just want to show you. I mean, the commitments of traders reports, okay, this is the positioning in the futures for these things. I mean, the 2 years, these commercials, this is speculators. Look how short specs are, the 2-year note, right? These people still think, oh, maybe they're not going to do 4 rate rises, but they're going to do 2. And I'm still saying they're going to do 0, and they're probably cutting rates next. So as a hedge to all this, you stay long the short end. Here's the 5 years. Here they are, short, right? And just as a comparison, here's the 10 years, which is why I say 10-year. You know, they short a little bit. You know, this is really the speculators, but not really. And in the 30 years, you know, they're really nothing. So I think an asset bounces here. I think we're starting to see tape movement that is positive towards that kind of argument. I'd be short yen first. I'd be long industrial metals second. Be long Aussie dollar third. And then again, if you only can do stocks, okay, you can probably try and play the stocks to the long side too for a while. But be long the short end against it. You know. All right. Thanks. Good luck.